Okay, so markets just closed. This is Wednesday, the 29th. We've had a nice move up today following the Bank of England's basically QE throwing in the towel very early. We'll maybe get into that later when we look at yields, because ultimately yields is the dominating factor in markets for some time. I've mentioned that in almost all my videos. Now, I did do a video yesterday. I wanted to, I just didn't have the time. Last video was on Monday, the 26th. I said that we would bounce. We did. Now, we didn't bounce the following day on Tuesday, but we didn't move down too much. So that just sort of suggests that actually encouraged me even more to think, right, the bounce is on, because really we've been going down very quickly every day, and nothing goes up in a straight line, nothing goes down in a straight line. So a bounce was due, in my opinion. I drew these circles on Monday, I believe, just to sort of highlight where I thought we would go. First resistance is this section here. If I stick to the SPY, it's just obviously the gap fill, and it's also previous support here. We drew these lines a while ago, so support becomes resistance if there's any follow through. And to be honest, it's quite a strong close today, so I do expect the gap close at least tomorrow, Thursday. And let's see, some people start getting really bullish. They'll come up with reasons why and all this other news and momentum trades. And basically, if we do have follow through, which is possible, then I say we go to the second resistance, which will be stronger resistance. 5% is definitely possible in 1-2 days. I don't know if we can do it by Friday, maybe Friday, But anyway, then we come and meet this downtrend resistance. So I think we'll at least gap close tomorrow, and we'll see, possibly go up here. If we do get there, I'm going to be selling a lot more. I'll be selling into this. I started selling a little bit because I did buy. If you remember on Monday, I said I started doing some knife catching in the GDXJ. Great trades, because that's up. I mean, even yesterday it was up Tuesday, so it might be up like 8, 9, 10% just on those 2 days. So beautiful swing. But anyway, I think that's pretty clear. I thought there might be a bounce. Tuesday, it just was a bit sideways, but that was pretty encouraging to me. And then today we got the bounce. Now, okay, that's because of the Bank in England, but I think we would have bounced anyway. I just think we've come down a bit too fast. I mean, obviously, I predicted this whole move down from all the way up here, even the bounce, the sideways flush. And then when we get here, for me, it's obvious we have a small bounce and then basically come down here and flush. The only thing that will change my mind is if we have small central banks coming in and basically throwing in the towel, because um, that will provide some support for the markets, but it'll also signal, oh, the Fed will do the same. And because the market's forward looking, that could be what the market wants to come out of this basically bear market recession. So that's the SPY. NASDAQ, very similar. Yeah, all these circles already here. Again, similar chart patterns. So it's already hit first resistance, I would say. Okay, you have the mini other resistance here around 285.5. But otherwise, I think I'd call it 290 to 294. But just this entire area set into that. Dow Jones, actually, which has been weaker, it already flushed its double bottom here. So it's come back up to test prior support. So it's actually one level lower than the other indices. And yeah, I think I'll stick with this circle here. So let's say if it goes a little higher with the others have what, 4 or 5%. Yeah, then actually it might go all the way back up here. I'll even remove this one. Probably run into some resistance over there, and the Russell 2000, which finally caught up on the way down. You can see similar, it gap filled, it touched the gap, closed it. So this one's a bit off. I would say it should have been there, but whatever, we've hit it. Next resistance up here, price support, call it 176-ish, and then sell into that and look for the move lower. Again, either tomorrow or by Friday. I think expecting it by Monday. It depends what happens over the weekend. But yeah, that's what I think now. The VIX, I remember saying the VIX will find resistance around 32. So we called the VIX very well. It actually popped out of its descending channel here. Seems to have hit resistance where it last went up here, so 35-ish. And then today, obviously, with the markets going up, it just went all the way back down to 30. I think, and I think I said this also, if the markets do bounce, we'll go back to 28. And again, I think the markets will continue to bounce tomorrow, Thursday, and we should be able to see the VIX at or even below 28. So I mean, it's quite a big circle, but around this zone, basically support at 25.5, but I think we'd hit 28, maybe even venture below. So that's what I think about the markets. Let's move to yields. And I said yields would come down on Monday, and Monday was pretty much the peak. So called that very nicely, like the rest of the markets. Big move down. Obviously, this is the Bank of England that did it. This is the US 1 year, the 2 year, very similar. So Monday we peaked, Tuesday sideways, Wednesday down. Perfect. Same thing, really. Okay, Tuesday we ventured high. Even today we were a bit green with the 5 year. 10 year got very scary. It basically hit 4% today. So it did go a bit higher after Monday, but by and large, got that quite right. And to be honest, 4% is pretty scary. And it's the same type of percentage moves, the same round number moves on longer term yields that scared the British into reversing central bank policy and unleashing QE today. We'll get to that later. That's the 30 year. A new addition to my yield section. I had it actually Tuesday. I started to add it because I could see something was going crazy. The 30 year, actually, it did go higher. So Tuesday went higher, and then today it also went higher at some point, but obviously came down. So yields have come down significantly. That's helped the market. So people are buying bonds, therefore the yields go down. But also people are buying stocks. So money flowing back into both markets. We'll get to currencies in a bit. Japanese, I'll leave it. They're a special case. I mean, they're toast. Also, the Germans are very happy to have the Germans have the British do this for them because that also relieves pressure for them. So that's come down quite a lot. Still above 2% on a 10 year. The Italian, they had their elections, but news aside, this is all technicals. So this has come down following the British. Now the British 10 years come down, and the 30 year looks just like the 10 year, but just more exaggerated. So look at that move down because the Bank of England basically said they would do unlimited QE temporarily, but there's nothing more permanent than a temporary government program, to quote what is it, Milton Friedman. But yeah, this they're gonna target the longer um dated bonds. So this one, especially the 30 years, so this one really got smashed. And actually initially it was a bit muted. If I look at this 3 year, I remember there was a bit of a smash. Okay, this lasted about 10 minutes and then it really came down, retraced back to the scene of the crime, and now it's just ventured lower because QE, that's what QE does, and that's what it's been doing to markets the last couple of decades. So yields, big move lower in all yields, quite simply because of the Bank of England. Who knows what other central bank will come out and do the same thing? Will it be? I don't want to say the ECB, but they all fold. I mean, the excuse is, institutions are crumbling, the market's crumbling, and whatever. This is why I said that yields are the most important element to the markets, because ultimately that is what will break things. I didn't know whether it would be a massive financial institution, an insurance company, a country. I don't know, but yields, it hits everything from personal finances to mortgages. I mean, the Bank of England also, what did I read today? That a quarter of the mortgages um, were on floating rates. So if interest rates go up, well, you didn't fix your rates. So 1, 2% wasn't good enough. Okay, now suffer the consequences. You're going to move up with the market. So with everything is tied to rates, corporate debt, obviously country debt, personal debt, whether it's house, student loans, car payments. So obviously with these rates moving up everywhere very fast with the most amount of debt ever in history, obviously something's going to break. And it looks like the British broke first. So let's see who breaks next. And what does that do? If another central bank starts to break and says, okay, we're going to stop raising rates as fast, or we're going to put QT on hold, well, that will push the markets up. So will they all sort of do their own little towel throwing and they'll just push up all the markets? Because I don't think the markets, especially the US markets, will move up enough to get out of the recession unless the Fed does it. Thing is, these central banks stating they're going to throw in the towel makes people think that the Fed will do it sooner than they otherwise would. So this has kind of changed it a little bit. I think it will provide at least enough ammunition or momentum to push the markets up, at least to close this gap, possibly to go all the way up here. So I'm happy. I bought on Monday, basically up nicely on the GDXJ. I'll show that in a bit. I think we might be able to get all the way up here, but I'm selling into this move. I'll sell a little bit. Today I sold a tiny bit, but nothing because there were some stocks that were up 15%, like CDE, my favorite bounce play in silver stocks. If we can't fill tomorrow, I'll be selling a little bit more, but I'm really holding most of my sells for this move here. But obviously, still keeping a core position. I'm always keeping a core position. So yeah, that's the markets, that's the yields. Let's move to currencies. And very quickly, the DAX started to get a bit, started to bounce, but I think it didn't really enjoy most of the bounce that US markets got. So I expect this to come back into the 12,400 and close there tomorrow. Um, a nice sort of fake flush bounce V bottom. Obviously, the catalyst being the Bank of England. Now, the GDXY, I said like yields would come down. So Monday is when I said it. Tuesday was just kind of sideways, nothing day. I wasn't able to make a video, unfortunately. And today we have the move. So I'm not going to miss today's video. Let's see. I think we can go back to around 111, 110, which is also where we have this longer range. Need to go to the weekly longer range trend line. So we broke out of it. It's pretty magnificent move. But before we get to 118, 120, looks like we're going to go back down, test breakout. So I think, I think we will get to, let me just move this back. Yeah, basically to where the circle is. So let's move it up since we can move up a bit about there. Yeah, like I said, 110, 111. So if this goes lower with yields as markets go up, then we can reverse and then go back up and test if we can really make 118, 120. And then therefore, because the dollar went down, basically all the other currencies had a small move up. So it's still very weak. I mean, look at this, the euro, you know, almost in the 94s. But anyway, this could move back up to 99, maybe test $1. We got this downtrend line also providing resistance. So I think we'll get to, yeah, basically $1 is a sell. So sell just below $1. The pound, well, that had some crazy moves. Actually, I should have a daily. That had some crazy moves. With what's going on. I mean, the pound. I think it was on Monday. Was it? Over Wednesday. Was it Friday or Monday? I've forgotten now. This huge move lower. I mean, that's why the bank intervened. But it's it's ridiculous. No, the Bank of England intervened because of yields. The thing is, yields were going up to prevent inflation. So now if they're going to start doing, if they're not going to do Q2, QT, and they're going to be doing QE, well, that's going to inflate your currency. So you're really risking high inflation in Britain. And it's already suffered a lot of inflation. I mean, look at this destruction of the pound. I mean, we're almost at $1, 1 to 1. It's ridiculous. Like £1 equals €1 equals $1. That's how strong the dollar is. So you've got this destruction of the pound, but yields go up and threaten the solvency of big institutions, pension funds, and mortgages. Okay, So they're going to print money and destroy the pound even more long term. It's absolutely ridiculous. Um, you should be letting markets float freely, or if something is insolvent, then let it be insolvent. So these guys always come and save the market, but the grandma who saved all her money, she doesn't get saved. In fact, she gets stuck with a bill. So yeah, I'm not happy about that. And that's what I think the consequences will be. The pound maybe bounce a little bit because the dollar's going down, but basically long term doesn't look good for the pound still. Anyway, ran over basically, the dollar down. So generally all the other currencies had a bit of a reprieve. You don't see it here that much because we've reset for the day. So that's it really. I'll just cover very quickly the commodity. I'll do gold and silver today. It's a bit of a late night for me. So what did I say? Monday, I caught the knife on Monday, this red candle in gold and silver, particularly in the GDXJ. I used gold and silver as a barometer. And on that day, it looked like we were going to go all the way down. I just at the close, I thought we are going to bounce. I just thought the selling had been too much. Uh, what else? There were certain other reasons. I just also looking at the SPY at the time. The SPY, the Nasdaq, they were at the double bottom low. I thought we are going to bounce, and I thought we'd bounce to here, which is why those circles are there. And looks like we've done it already, basically. So 1650, 1660, all the way up to 1680. I think I remember saying that. So I didn't buy gold. I bought gold, silver related stocks, but it's kind of already done the minimum. I think again tomorrow we'll go up a little bit more, maybe to 1670-ish. We should get some resistance around 1670, high 70s. So let's see if we can do a $20 pop tomorrow. Silver, perfect, absolutely perfect. Hit that $18 today. That was today, yeah. Absolutely beautiful. $18, just as I thought it would, and just bounced really nicely. So now let's see if that goes up also. What kind of a move is this tomorrow? 3-4%. That's quite a big move, but it is possible. And then basically find resistance where all the other bars are, and also this descending line. So silver could do 3-4%, and that would probably be the equivalent of a $20 bounce in gold. So very nice. These should go up with yields coming down, with the dollar going down, with the markets going up, and just generally with technical momentum and continuation on chart patterns. And finally, these things had a beautiful day. So I bought GDX related stocks on Monday. That was the knife catcher. Tuesday, it was up. This is not a green candle, but the close on Monday is whatever this is. Let's call it 2613. And then it was actually 2633. So actually, we were up on the GDX and the GDXJ, if I'm not, yeah, and both. So yesterday it was up, and then today, obviously, enormous move up. So just really good trades, really happy about those swings. The thing I just noticed though, and I just noticed this a couple of minutes ago before doing this, its GDX has already closed its gap perfectly, whereas the GDXJ has not. And usually the GDXJ is stronger, and it did make more of a move today. But I would have expected the GDXJ to be maybe even the way all the way up till here. Doesn't matter, it's not much. But I still think both will move higher tomorrow with the metals going up, with the yields going down, with the dollar going down. And I think it could make a nice strong move tomorrow, actually, not just a small one. I think we could have some strong continuation. I just feel like we will get resistance. Yeah, let's say about 5%. I'll probably sell because I sold a tiny bit today because I bought down here. So, nice move. I don't know how much of a move that is. Feels like 10%. Okay, 8.5. But in some of the stocks, it was, I mean, CDE alone today was 15% or something. Where is that little beauty? Yeah, 15%. It's my favorite silver stock always. I mean, it was a massive day for the stocks. So, but yeah, I just feel like we could go a little higher tomorrow. But I'll be selling into this a little aggressively. Everything I bought down here, plus everything I probably bought, well, I bought here, but I bought the low also. But basically just swinging it constantly. And since I've called the market pretty well, pretty damn well, if I can say so. I'll just continue to sell at the technical levels I've identified. So yeah, didn't sell too much today. Just waiting for tomorrow's continuation move in both minors, the seniors and the juniors. That's all I'll say. I'll keep it short because it's very late. Finally, Bitcoin. To be honest, Bitcoin on Monday, I thought it was very strong. I thought it'd go higher. We did on Tuesday, but when the market dropped because there was a retracement, I did think Bitcoin was pretty weak on that retracement, and it was like a rejection of this breakout. Now today, it went green because it had to. All the markets, all the risk on sectors were green, so obviously Bitcoin's a buy, but not that impressive, 2.5%. So and we're getting very close to an area where we're going to be forced to either break out or break down this downtrend line that I've had for a long time. Now, I find it very credible because it goes very far out. It hits, okay, obviously 1, 2, and then 3. I don't really want to call this one. And you could even say 4 with Tuesday's hit. I think this is a credible line. I usually get these right. And to be honest, if it starts to curl up and take out 20,500-ish, call it 600, you can expect to move straight away to 22,500 and then 25. For me, that would be a breakout. Very bullish, but I don't know how to call it right now. If the markets go up as I think they will, Bitcoin will probably test 20,500. But if the markets start to come down, I feel like Bitcoin could, flush this low and then go back down to 17,500. This is just chopped down here. It looks like it's just waiting to, several days until it's forced to make a move. But again, if the markets continue to go up tomorrow, which I think they will, and maybe even Friday, just a bit more of a bounce, then we could see it testing the upper range here. So let's see. I'm not even sure which I wouldn't trade it right now, and I'm not in it. I'm actually in Hive, the mining stock. So it's just a bit of a sideways and unknown at the moment. I would probably trade once it makes its initial move if I had to. But yeah, I was pretty bullish on Monday, and then after seeing that candle and the weakness of it, I remember it just went all the way up and all the way down. Yeah, this is it. It went all the way up and just flushed down because the markets, but I just thought that was too much because it was very strong on Monday. So pretty disappointing. And then today, also disappointing because it just 2% is not much. You got the GDX is up 7-8%, stocks up 15%. This is just 2. So yeah, I'm actually still a bit bearish on Bitcoin. So anyway, let me know what you think. That is my 2 cents. Again, markets, continuation of bounce, 1 or 2 days at least. These are my resistance points, but ultimately down again. All right, thanks.